As we enter the second quarter of 2024, you must make moves to earn or increase your income. One way you can do that is by purchasing stocks. I understand not everyone can make exclusive decisions on what stocks to buy, so I've taken time to find the 3 market-beaten stocks that you can include in your portfolio this April. However, remember to do your research before purchasing any of these recommended stocks. Thank you, and let's get into it. Number 3. Amazon. Yeah, it's a no-brainer that Amazon is one of the top 3 market-beaten stocks I'll recommend. Amazon has been killing it this year with an 18.7% increase in stock value. Its market cap is $1.87 trillion, making it the 5th most valuable company on the U.S. stock exchange. The stock closed at $180.38 in March, close to its all-time high of $188.65 in July 2021. In the past year, Amazon's shares has outperformed the broader market by a long shot, increasing about 80%. Despite this impressive campaign, Investing Pro models and Wall Street analysts believe the stock is still undervalued. They predict a potential upside of 2% and 14% respectively, which could take the stock value to around $206 per share. Another reason this stock is attractive to me is that Amazon will release its first quarter financial results on Thursday, April 25th at 4 p.m. ET. The sell-side confidence is high, and the earnings estimates have been revised upward 22 times in the last 90 days. There are no downward revisions at all. You'll agree that's a good sign. The consensus is that Amazon will post earnings per share of $0.85, a massive jump over 170% from the EPS of $0.31 in first quarter 2023. That is expected due to the company's focus on innovation and investments in automation, which should drive operational efficiency. Their revenue is also expected to grow by 11.9% from 2023 to $142.5 billion. That reflects the ongoing strength in its cloud computing, e-commerce, and advertising businesses. Investing Pro highlights Amazon's promising outlook. They emphasize its strong position in the e-commerce and cloud computing industries, allowing it to leverage a resilient business model and strong profit growth. These are compelling reasons to add Amazon stocks to your portfolio this April, but that's not all. Apart from the reasons I've already mentioned, here are a few more. Diversified business model. Amazon is more than an online retailer. It has diversified business model with ventures in cloud services, digital streaming, artificial intelligence, and more. This diversification reduces risk and creates multiple avenues for growth. Global presence. Amazon's global footprint gives it access to massive markets worldwide. This international presence provides a broad customer base and allows it to benefit from global economic growth. Strong brand and customer loyalty. Amazon has a strong brand image and high customer loyalty with millions of Prime subscribers. This customer base provides a steady revenue stream and the potential for cross-selling other products and services. Innovation and technology. Amazon's commitment to innovation and technology such as AI and machine learning gives it a competitive edge and positions it well for the future growth. With all these factors, you can see how compelling it is to add Amazon as part of your investment portfolio for April, especially with its shares likely to hit a new record highs. Number 2. Black Hills. Black Hills is a bit of an underdog with a market cap of $3.6 billion, especially when you compare it to the big players like Amazon, Goldman Sachs, and others, which have market caps many times more than this. But the interesting tidbit is that Black Hills has been increasing its dividend for 53 years straight. That puts Black Hills in the elite group of dividend kings. One thing that makes Black Hills stand out is its dividend yield of 4.7%. That's even higher than Amazon's yield and beats the average utility yield of about 3.6% based on the Vanguard Utilities ETF. Black Hills dividend yield is near a 10-year high, so it is a bargain right now. It is one of the stocks you would want in your investment portfolio. Let's look at some Black Hills stats. Its market cap is $4 billion with a daily trading range between $53.52 and $54.30. Its 52-week range is $46.43 to $66.85. The trading volume of Black Hills stock is 61,947, with the average value being 579,561. Its gross margin is 23.59% and its dividend yield is 4.66%. That screams potential profit and presents a strong case for this stock. Black Hills combines an electric utility and a natural gas utility company. It serves areas in Arkansas, Colorado, Iowa, Kansas, Montana, Nebraska, South Dakota, and Wyoming. Inflation and rising interest rates have impacted the company's operations as they've increased operating costs. Still, Black Hills has been working to cut down on debt. Plus, its customer growth has nearly tripled the population growth rate in the US. So even though it might not be a household name, it's set up for a long-term growth. Other plausible reasons for considering Black Hills stocks are stable industry. Black Hills operates in the utility industry, and utilities tend to be stable because people always need electricity and gas. These can provide steady returns, especially in uncertain economic times. Dividend king status. Black Hills has a long history of increase in dividends that indicates the company's commitment to returning capital to shareholders. High dividend yield. A high dividend yield can provide a steady stream of income, which is especially valuable if you're looking for regular returns on your investment. Potential for growth. With the company's high customer growth than population growth, Black Hills has a solid potential for further expansion. Diversified operations. By operating in both electric and natural gas markets, Black Hills can spread its revenue stream. That helps to protect the stock against a downturn in any one market. With that, you can, to a large level of confidence, add Black Hills to your investment portfolio for April and even the entire second quarter of 2024. My final pick for today is AppLovin. This company creates software solutions that help app developers boost their marketing, generate more revenue, and expand their businesses. In the recent landscape of digital apps, where every company and app developer is vying for attention and screen time, AppLovin's services are crucial. What's exciting is that AppLovin's earnings potential is on the rise. That is largely due to AI-based updates and its knack for driving return of investments for clients across various platforms, including phones and connected TVs. Numbers don't lie. So let's look at the numbers posted by this company so far. AppLovin's fourth quarter was a big win, causing its FY24 consensus to jump by 57%. Its FY25 outlook is even better, with a 77% increase. This positive bottom line has earned AppLovin a Zacks ranked #1 strong buy. Over the past year, App shares has shot up by 420%, outperforming Nvidia's 250% increase. That includes an 80% surge YTD. Despite this impressive run, AppLovin still trades 30% below its record highs. Regarding valuation, App is trading at a 45% discount to its median and is just slightly above the tech sector at 26.9x forward 12-month earnings. If you don't understand all the figures I've mentioned just now, to speak in clear terms, here are some more reasons why you should consider adding AppLovin to your portfolio list this April. Strong earnings outlook. The company's earnings are expected to continue growing, which could lead to further stock price appreciation. Innovative technology. AppLovin's use of AI to improve its services could give it a competitive edge, especially now that the AI revolution is on full blast. Positive industry trend. The demand for app development and marketing services will likely grow as more businesses go digital. Attractive valuation. The stock is currently trading at a discount compared to its historical average, which can make it a good buying opportunity. Strong performance. The stock's performance over the past year could signify future success. Given these factors, AppLovin could be a solid investment opportunity for April 2024. If you decide to add this stock to your portfolio, you will be making a good call. We've carefully picked these 3 stocks to ensure accuracy. However, as I mentioned earlier, please don't take this as financial advice. Instead, conduct proper research and decide which of these you want to add to your portfolio. What are your thoughts on these stocks? Comment down below and remember to give a like. Also, if you're not following yet, remember to click the follow button and stay connected. Till next time, bye.